You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 16th day of July, 2025. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. So to get in there, you have to be one of our traders or taking our 1-week free trial. If you've not yet taken the 1-week free trial, when Michael joins us in about an hour, he'll walk you through it step by step, a couple of times. Now you might be thinking, well, gee, today's Wednesday, so I'll get gypped out of a couple days. Not true. Sign up today. We'll get you indicators indicating today. Your trial will officially begin tomorrow morning and run all the way through Wednesday afternoon of next week. And when you take the trial, there's no credit card required. And you're not just getting access to the live training room. We actually treat you just like you were a full-fledged member, a passport holder, for 5 consecutive trading days, so that at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back at 12 noon for this broadcast, which, unlike the morning broadcast, is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of doing it that way is you will immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. We're celebrating our 20th year anniversary. And I'll tell you, in the spring of 2005, if you'd have told me I'd be saying this 20 years later, I'd still be laughing. But yet, here we are. Me drinking coffee on a live broadcast. All right. Now, not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. Now, if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But again, thanks to the power of YouTube, you can see how we have evolved over the years, from whence we began to where we are now. youtube.com/CFRN. As you can see here, we have our daily schedule posted. Michael will join us at the top of the hour for a recap of what happened in the live training room. Then we'll do some live trading on the TradingView platform. But we'll get started where we always do on each afternoon broadcast with our daily devotional. Now, the topic of our devotional, and we're in day 5 of 5, so we'll begin a new topic tomorrow. It's about living in community, doing life together, the way God intended. Our scripture today is Acts 2, verses 42 through 47, and I'll share it with you from the NIV translation. They devoted themselves to the apostles' teaching and to fellowship, to the breaking of bread and to prayer. Everyone was filled with awe at the many wonders and signs performed by the apostles. All the believers were together and had everything in common. They sold property and possessions to give to anyone who had need. Every day they continued to meet together in the temple courts. They broke bread in their homes and ate together with glad and sincere hearts, praising God and enjoying the favor of all the people. And the Lord added to their number daily those who were being saved. Again, Acts 2, verses 42 through 47. Ministry flows out of community with others. Jesus modeled perfect community for us during his time on earth. He made it a priority to have communion with God. He lived life with a close group of friends. And finally, that group of friends ministered together to the world around them. And we're still talking about it today. Communion leads to community, and community leads to ministry. If anyone were strong enough to do ministry alone, it was Jesus. He was strong enough to minister to everyone without needing the disciples, but he chose to do ministry in community. Jesus and his disciples went out together to proclaim the good news. There are very few examples of Jesus working alone. There is power in a shared proclamation of the gospel. This is done by both words and actions. It is done both organically and in formal, planned-out methods. As Jesus strengthened his relationship with his disciples, their ministry to others grew stronger as well. The same can be true in our lives today, thousands of years later. When we live in a community of faith, it is much easier to minister to the world around us. There are times when we participate in formal, planned-out ministry. This could be working with churches or local ministries to minister, to serve the hurting and broken in our communities through special initiatives and events, or just going to church. It can also be done organically. As we live in a community of faith, we begin to take notice of the regular interactions we have with others in the normal, everyday parts of life. The Holy Spirit guides us into conversations with neighbors, co-workers, or any other person who regularly comes across our paths. Living in community allows us to be more in tune with God's presence in those situations. And through our words and actions, others can see Jesus in us. Finding and living in community is an imperfect practice. What's being described here is the goal, but as you know, human relationships can be, a little messy. But that shouldn't stop us from trying. When it goes well, we celebrate it. When it doesn't, we grieve it and keep moving forward. There will be seasons of life when community is a source of great joy and encouragement, and seasons of life when it is our greatest pain. Being aware of this allows us to pursue what is good, while knowing that we live in a broken world. Someday, perfect community will be restored. Until then, we seek what is good, even if it doesn't always work out. We often feel like we aren't doing enough for God. We think we should be giving more of our time and energy and resources to ministry. What if God wanted more of our hearts than our time? When we focus on developing an awareness of God's presence, ministry in the ordinary parts of our lives becomes more clear. It becomes less about doing good things for God and more about seeing Him in our present reality. When we see the world through a kingdom perspective, ministry to the world around us becomes clearer. Spend some time today reflecting on your normal weekly routines. What people come to mind? How can you slow down and engage with them? How might God be trying to minister to them through you? And you go, through me? You must have the wrong address. No. God can use even the least of us to minister to those who have not yet built a firm relationship with Jesus. It's an awesome responsibility. I encourage you, rise to the occasion. Let's pray. Heavenly Father, thank you for the example you've given us of the early believers who devoted themselves to your word, to fellowship, to breaking bread, and to prayer. Help us to live with that same devotion today. May our hearts be united, our hands generous, and our joy contagious. Add to our number daily those who are being saved, all for your glory. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Wednesday. Let me give you the numbers from around the world. We're going to start with the cash markets, or the indices as they're called. I just popped across my screen. Trump denies that he plans to fire Powell. Highly unlikely. Well, that's not what I heard, but if the president says it, I guess I'm going to believe it. Remember, nobody is placed in a position of authority over you without God's permission. Starting here in the U.S. with the indices, the Dow's up 2 points, which for the Dow, that's basically unchanged on the session. The Nasdaq's down 35 points. S&P 500 is down 7. The Russell 2000, our man in the street, is up 3 points. Now that would sound like we've had a pretty quiet session, but nothing could be further from the truth. In the commodity basket, crude oil down 55 cents, trading 65.97 last. That's a drop of almost 1%. And if you saw the inventory numbers that came out this morning, as they do every Wednesday at 10:30 a.m. Eastern, analysts were expecting a draw of, I think it was 1.8 million. There was an actual draw of well over 3 million. Now that should send crude higher. So what's afoot here? We'll get into that. Gold is up $15 and let's make that $17. Trading $33.54.30 last. Silver is basically unchanged on this session, up 1.5 pennies. In the Asian markets at the close, the Nikkei fell 14 points. The Shanghai dropped 1.25 points. The Hang Seng fell 72. And in the European markets at the close, FTSE down 11, DAX down 50, CAC down 44. So that gives us a red day in Asia, a red day for the UK, but it's a mixed Radio Wednesday here in the US of A. We got two of the major indices in the red, the NQ and the ES, while the Dow and the Russell are just barely in the green. I think by the end of the broadcast, we're going to probably see them all in the red, probably deeper in the red. But I could be wrong. I will point out that when we have mixed markets like this, you don't have the same good follow-through on your trades that you may have come to expect. As futures traders, we can be long, short, long again, all in the same hour if that's what the chart in front of us is telling us to do. So we don't really care if the four major indices are all green or all red. We just like to see them all the same color. But today, at least for the moment, we have the dreaded mixed markets. So we'll see where we stand by the end of this broadcast, about 2 hours from now. Let's look at the global news. Today marks 80 years since the world's first nuclear bomb detonated in New Mexico. On July 16th, 1945, at 5:29 a.m. in the Jornada del Muerto Desert, a 21 kiloton explosion lit the sky, thundered, and created a mushroom cloud 38,000 feet high. I have a video of that. I'll post it in the Breeze channel after the broadcast. The Trinity test, as it's called, supposedly named by physicist J. Robert Oppenheimer. And yes, there was recently a movie that came out called Oppenheimer, in reference to a 17th century holy sonnet, represented the culmination of the Manhattan Project during World War II. Scientists, engineers, and military personnel spent 3 years racing to develop atomic weapons before Nazi Germany in the top secret mission spanning major sites in 3 states. Weeks after the test, the U.S. dropped similar atomic bombs on Hiroshima and Nagasaki, killing over 100,000 people instantly and basically ending the war in the Pacific. Tens of thousands more died from the long-term effects of radiation, including rare cancers. Now, of course, we all know President Obama went on his apology tour when he became president, apologizing for this dark day in history, along with all the other horrible things that the United States had done, like rebuilding Paris and rebuilding Germany. And everywhere we win, we go back in and we rebuild them. So, thanks for the apology. Now, I'm not happy that we were forced to do that. But the United States was simply minding their own business when on a Sunday morning, the Japanese attacked Pearl Harbor. And when they wouldn't back off, we were left with no other choice. Now, I spent 17 months in Japan when I was in the Navy. That was back in the late 70s. So Hiroshima and Nagasaki was still fresh in the minds of most Japanese. So some nights we couldn't even go on liberty because there were college protesters at the gates throwing rocks and bottles because they were angry about what we did to their grandparents. So the Marines, they would stop us at the gate and go, "Sorry, not tonight." So we would have to go to the club on base, which wasn't a bad thing because the drinks were much cheaper, and a lot of the ladies who could gain access to the base would flock to the on-base club. We also had liquor stores on base. So if you're going out for a weekend of partying in, New York City, that's when I was stationed in Connecticut. We would fill a sea bag with booze. Now, this is when I was a young man. We'd fill a sea bag with booze and then take the Amtrak right into Manhattan, Times Square. Party all weekend and be back on board Monday morning for muster. Some of us didn't always make it back on time. I know a thing or two about that. Moving on. Flash flooding in New York and New Jersey killed at least 2 people late Monday when their cars were swept into a stream. The heavy rain between 3 and 6.5 inches in northern New Jersey and over 2 inches in 30 minutes in New York City flooded parts of the city's subway system and left cars stranded. Well, I got to tell you, the subways in New York, they could use a cleaning out. But not like this. Now, one thing I left out about the Trinity test. Residents near the Trinity test became eligible for up to $100,000 in federal reparations for health problems caused by radioactive fallout. Now remember, the Trinity test was held in Nevada. And it's time for the Emmys. The nominees for the 77th Primetime Emmy Awards were announced yesterday, with Apple TV's Severance leading the field with 27 nominations for its second season. I've not watched that. HBO Max's The Penguin gathered 24 nods. Haven't seen that. Followed closely by The White Lotus and The Studio with 23 nominations each. Streaming platforms continued their dominance, with HBO Max receiving 142 nominations, the most ever for the network, while Netflix earned 120. Let's go to the Wall Street news. President Trump yesterday told reporters that Jerome Powell's handling of a $2.5 billion renovation of the Federal Reserve headquarters sort of is a fireable offense. and reportedly asked some GOP lawmakers if he should remove the central bank chairman. CBS News reported today that Trump posed the question during a meeting in the Oval Office with House GOP members, that some lawmakers agreed and several indicated he will do it. But again, he said today he's not planning to. Trump's latest comments and the new CBS report raise new questions about whether the president may in fact cease to oust the Fed chair, a move that would surely lead to a legal war with Powell, who has argued he can't be removed by law. Well, there is a little clause that says if there's probable cause, he can be removed. So the legal war would be whether spending $2.5 billion renovating his offices is just cause or probable cause. All right, let's move on. That's kind of old news, but it's in the news today. The second quarter of 2025 was a great time to be a stock trader at one of the country's major banks. The equities trading desk of all 5 of the bulge bracket banks, JP Morgan Chase, Goldman Sachs, Morgan Stanley, Citigroup, and Bank of America, posted double-digit growth compared to the second quarter of 2024, as traders reveled in the whipsaw volatility sparked by Trump's trade fight that escalated in April. That's not over. Today, U.S. stocks pared their gains on Wall Street as a surprise inflation print came out, which we'll get into in another article. This article. U.S. wholesale inflation cooled last month despite worries that President's tariffs would push prices higher for goods before they reach consumers. Yesterday, we got the CPI number, which was higher than expected by 0.1%. But when the PPI numbers came out today, well, that was a different story. The Labor Department reported today that its producer price index was unchanged last month from May, after rising 0.3% the previous month. June wholesale prices rose 2.3% from a year earlier, but they leave out the important fact: how much inflation has been tamed since the president took office. June wholesale prices rose 2.3% from a year earlier, the smallest year-over-year gain since September. Both measures came in below what economists had expected. But guess what legacy media's clutching their pearls over today? The CPI numbers from yesterday. They're not talking about today's PPI numbers. I wonder why. It's almost as if they want our economy to fail. They would actually consider that a feather in their cap. And if it were to happen, it would be Jerome's fault, not Trump's. Large cap tech stocks will likely soon be forced to meet the moment. The day of reckoning is here. The do or die challenge for the tech bulls: a series of hot financial results and outlooks to match 3 months of hot stock price gains. One of the strategists, Laura Goodwin, at New York Life Investments, said this: I anticipate that the quality of earnings from these large cap tech companies will continue to be strong, but their ability to move their valuations higher and higher, completely unfettered, certainly is likely to be challenged here in the next couple of quarters. New York Life Investments has more than $800 billion in assets under management. So when you hear me talk about the institutional traders, I usually mention Goldman Sachs, BlackRock, State Street. Well, here's another one right here, New York Life. $800 billion under management. Now, I can't believe that they have the audacity to print this, but tariffs have finally caught up to the conversation about tariffs. The price increases that business and economists have warned about for months have started to seep into the hard data, showing inflation accelerated for June by 0.1%. And you know what else they don't tell you? That 0.1% increase in the inflation has far more to do with housing prices and mortgage rates than it has to do with a carton of milk, a dozen eggs, or a gallon of gas. Very selective how they report that. While the rising pricing pressures were expected as they clutched their pearls, there are larger implications at play for the Federal Reserve. Tariffs are one of the obstacles standing in the way of the central bank's inflation target of 2%. No, it's not. The Fed is standing in their own way. And the latest confirmation that import duties will raise costs boosted the chance of the Fed remaining on the sidelines. He's doing everything he can to crash this economy, on top of spending $2.5 billion to fancy up his office. The Trump administration and many market observers are offering diametrically opposed explanations for why dramatic tariff threats have been met by a ho-hum market reaction. The emerging White House view is that the resilience is a signal that traders are essentially fine with tariffs and are perhaps even now on board with the effort to rebalance global trade after markets were yippy and afraid in response to a similar series of promises in April. This view will probably give President Trump confidence to stick to his upcoming August 1st deadline on the tariffs. But many market watchers offer a completely different explanation. They say traders hate tariffs as much as ever, but they are shrugging them off, at least in part, because they simply don't believe Trump's latest threats will ever come to pass. Both can't be right, which has at least some concern that markets may not be fully grasping the bumpiness likely ahead, or not ahead. Now, this was surprising, and not much surprises me these days. From Reuters, the French government thinks the country has too many days off for its own good, but its proposal to cull some public holidays may not produce much of an economic benefit. Prime Minister Bayrou has proposed scrapping 2 of the country's 11 public holidays as part of a deeply unpopular emergency plan to plug a budget hole. In his sights is Easter Monday. Oh yeah, pick on Easter. And one of 4 bank holidays in May, a month Bayrou compared to a Gruyere cheese for its many holes. Oh, come on, it is France. No offense to anybody listening in France. From Reuters, New York. Bank of America has been working on stablecoins like the rest of the industry, and investors can expect the lender to move forward on this, according to B of A's CEO. We feel both the industry and ourselves will have responses. We've done a lot of work, the CEO of the second largest U.S. bank said. Stablecoins are the stupidest. If you want to own the dollar, just own the dollar. Why do you need a stablecoin that's pegged to the dollar? The CEO said Bank of America is still trying to understand client demand, which was not high at this point, and would roll out a stablecoin at an appropriate time. likely in partnership with other players. Follow the leader. And last from Wall Street, U.S. factory production edged up in June as a decline in motor vehicle output was offset by gains elsewhere, though manufacturing remains constrained by tariffs on imports. Oh, really? What about the $100 billion we've already collected in tariffs? What about all the foreign countries that are making investments in America to build manufacturing plants? So while they're so uncertain about the horrible effects the tariffs could eventually have, you don't hear them talking too much about the promising future that will come from all the new jobs that will be created by these manufacturing plants created in America, hiring American workers based on foreign investment. Makes you wonder who's running the show. Just like we're wondering who was running the country for the last 4 years. They still haven't figured that one out. But at least they're on the case. Let's go to the local news. Logic 247. That's our 24/7 around-the-clock Emini alert service. Over the last 363 weeks, we have issued over 20,045 individual alerts. Now, when Valerie did the recap this morning at 7 a.m. Eastern, we were at 20,040 alerts. She will, of course, update the recap this afternoon, as she does each day. At the time she did the recap, now, out of those 20,040 alerts, over 363 weeks, what we averaged on a weekly basis was 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. The actual figure's around 12%. But I like to stay humble and just say 20% or less. When she did the recap this morning, since the markets opened Sunday night at 6 p.m. Eastern, we had issued a total of 40 Logic 247 alerts. 2 never triggered, 1 because I duplicated 1. And at the time of the recap, we were still waiting on the outcome of 5. So that gave us 33 actionable alerts, of which 2, or 6%, would have been stopped out, again based on market structure and a simple process we teach all of our passport holders. Now, yes, you can trade the Logic alerts. I can't stop you. But I can ask you to please use the alerts for the intended purpose, to learn how to read the chart. If your hope or goal is to become someone who trades for a living, it's never going to happen until you're able to successfully read the charts. Now, most people, when they become traders and look at a chart for the first time, it just looks like chaos. I assure you it's anything but. Now, we don't know what's going to happen next in the market. No one does. No man, no machine, no algorithm, not even AI. But once you understand the language of the markets, you can know with a high degree of probability what the next high probability move is. And about 20% of the time or less, the market's going to do something other than the next high probability thing. So if you're chasing that holy grail where you'll never get stopped out again, please save your time, please save your treasure. Professional traders don't fret over being stopped out. They understand it's as much a part of trading as breathing is a part of life. Now, the Logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Long before we had a Logic 247, we had our original alert service, the concierge trade alerts. And they're different. Different how? Well, number one, they don't have an entry price. They don't have an initial target like the logic alerts. See, each logic alert has an entry price, an initial target, additional targets, and a final trade to target. The CTAs are simply larger time frame targets, and they don't come out around the clock. They're typically published 5 minutes before the Globex open, as they were last night. Last night at 6 p.m. Eastern, that was the beginning of the Wednesday session. Tonight at 6 p.m. Eastern, that will be the beginning of the Thursday session. So, all of our traders and trial members had all of these targets 5 minutes before the market even opened. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So when we go through the individual markets and you see those targets drawn out on the charts, just remember, all of our traders had them 5 minutes before the market opened. So let's start with the daily chart, where we always do the S&P 500, the bellwether. And look what we got here. Red and falling. We knew it was coming. We've been talking about it for days. Now, we had a sharp sell-off today that took us almost all the way down to the daily BBC. We've popped back up, but now we have the black step line overhead as resistance, and we have support at the 50% fib extension. If we close below that black step line today, red and falling is going to grow, and by the time we talk tomorrow, we very well may have touched the BBC. Now, the green line, it's called the BBC. It stands for Bull Bear Cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses back above the green line, like it did on April 24th, we're bullish and expect higher prices. Pretty simple, right? Now, price always reverts to the mean. It doesn't matter what methodology or strategy or method of trading you use. It's just a simple fact you can hang your hat on, take to the bank. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. Once price crossed below the BBC, we got a leg and a retracement, a leg and a retracement, a leg and a retracement. Once price got above the BBC, we had a leg and a retracement, a leg and a retracement, a leg and a retracement. And we're due for another retracement. Now, as you can see, the pullback holds more often than it doesn't, whether you're pulling up from below or pulling down from above. So will this pullback hold? I couldn't tell you. Now, we've been holding above since the first pullback. We crossed above, price crossed above on April 24th. We got our first pullback on April 30th. And when price drops to the BBC, it often produces a powerful bounce, like it did there, like it did there. Sometimes it's a little more sedate. When blue and climbing is directly above price, that becomes potential resistance. Red and falling is bearish. But when red and falling turns to blue and climbing, look for higher prices. We're now in our 10th day of sideways consolidation. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now, I've been talking about this for a week. The BBC, as long as we continue to consolidate, instead of price dropping to the BBC, price is rising to meet or the BBC is rising to meet price. That creates a different dynamic. You'll see what I mean when it happens. Now, the daily chart's important because institutional traders look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. I encourage you, whatever you trade, stocks, futures, crypto, Forex, ETFs, look at the daily chart for 2 minutes before you drop to your smaller time frame and start trading. Number one, it gives you a free look over the shoulder of the deep pockets that actually move price. And you're able to identify major areas of resistance and support, not only today, but days, weeks, and even months in advance. Try it for a month. I don't think you'll ever go back. All right, all the alerts, both the concierge trade alerts, well, I guess it's not going to move. I wanted to shrink that down. All right, we'll just leave it alone. All alerts, both the logic and the concierge trade alerts, are created on the 30-minute chart. There's nothing magic about 30 minutes. It's just the time frame I chose years ago, and I've stayed with it. If it's not broke, don't fix it. Now remember, all of our traders had these targets 5 minutes before the market opened. And this candle right here was the market open. The vertical line separates today, Wednesday, from yesterday, Tuesday. Now we had a pretty deep sell-off yesterday, so no surprise that we would get a pretty decent retracement. And then the sell-off is continuing. We opened last night right here, and we dropped to the short target within the first hour of trading. Now this candle here opened at 62.72, and it dropped 5 points to the target, but it continued all the way down to 62.64 and a quarter. You only need 2 points to get your goal for the day. When the market finds support, it's going to go look for resistance, which it found at the weekly trading zone. The horizontal lines are the weekly trading zones, which we've published every Monday for our members for the last 15 and a half years. They're published Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So once we found support, when price moves up to a zone, we expect resistance till proven otherwise. Resistance will send the market back to support, back to resistance. Notice here, red and falling turned to blue and climbing. So we did manage to get a little bit above the zone. Now, only one of three things happens when price encounters a weekly zone. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time, the slice. That's not really a slice because we opened below the zone. But I'll show you a good example. Typically, when we have a slice, when the move runs out of steam, price will retrace back to the zone it sliced through, then continue in the direction of the slice. Now this zone is 62.73/74. This is 95/96. This is 49/50. I used to put both lines on the chart, but it just kind of made things crowded. So all of our traders get the zones Monday morning, and when you use the app to put them on your charts, it puts both lines on for you. So from support to resistance, back to support, back to resistance. Then we got above the BBC. When blue and climbing is chasing price, that's a good indication that the pullback may eventually not hold. We came back and look at these pullbacks. Okay. It held, it held, it held, it held. And then it sent us all the way up to the zone overhead. which we sliced through. And then we retraced back to the zone we sliced through and continued in the direction of the slice. Where did that resistance come from? Yesterday, right there. See that little double top? Yes, we spiked it a wee bit on this candle, but when we can only take out a previous high by just a little bit, we're very suspicious. So resistance dropped us back to support at the BBC. Then price got trapped between support and resistance. Back to support, back to resistance. Twice we hit the zone. Remember, that's what we expect. When price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support until proven otherwise. Support, support. There was support here. Yes, we spiked it. There was some momentary volatility this morning in the markets for a number of reasons. Everybody's pointing their finger at something different. But right now, this bounce off the zone, where now we still have 8 minutes left in the life of this candle. You should expect potential resistance right here at 62.89. If we get through 62.89, then we should move all the way up to the zone. Right there where blue turned to red. That's a great place for the market to find resistance. So you might write that down, or it may hit it right now. We'll check back in a minute and see if the resistance held there, or if we hang out just a second. It could spike it and then retreat. It could just power on up to the zone. It's trying to push through. It's trying to push through. But hopefully you can see that's a spot where you would want to take profit if you're long, just in case. We'll check back on it later and see where it ends up. There, it just popped through, but it hasn't closed. Still got 7 minutes left in the life of this candle. 6.5. Oh, am I seeing a wick up here? Huh. But again, you got to wait till the candle closes. Then if the next candle opens green above this area, that's a beautiful opportunity to go long and grab your goal for the day up to the zone. But it's starting to look like a shrinking violet. But again, you don't know till the candle closes. On the Dow. In the first hour, the market was open. We hit the short target, bounced, hit it again, finally got above the BBC along with the help of blue and climbing. We hit the zone, consolidated sideways for a few hours. Then we got a leg and a retracement and a leg. We ran into resistance at the zone. Now, we didn't quite make it to the target. That right there, see, the target is based off this high right here. So we could still hit it today. But look where the candle closed. And that's what I mean about waiting for the candle to close. This was green all the way up to here. But look where we closed. All the way back at the BBC. And yes, the pullback held. Pullback to the zone held. And it held. Resistance, resistance, resistance. We hit the short target again for a third and a fourth time. Market loves to repeat itself. Now on the Dow, we're dealing with the resistance right here. Next resistance is going to be here. Then right here, where blue turned to red. If we get up into this area, you should be able to trade that right up to the zone. But there's still 4.5 minutes left in the life of this candle. on the Russell. We didn't make it all the way to the short target in the first hour, but this candle opened at 2212.6 and dropped to 2209.3. So it was enough to get your goal for the day if you traded it. So we bounced, and then we came back and found support at the short target. Why was that the short target? Well, if you go over here, you'll find out why. Then we get above the BBC, we consolidate like we do 70% of the time at the zone. Finally overcame it, made a run to the long target, which was this high right here. And then we spiked the zone, and we spiked it, and we spiked it, and we spiked it, and we spiked it. When you see those kind of wicks to the upside, you should look for price to make a move to the downside. Now we're coming back to challenge it again. It's like I said when I was giving you the numbers from around the world, those were small numbers. So it seems like we didn't have any volatility today, but as you can see, we did. What'll be interesting to see is if we can take out these highs and this high. Now this high right here is a reflection of this little crevice right here. See how you got a wick pointing down and a wick pointing up? Perfect place for the market to find resistance. And it did. So we hit the short target once, twice, 3 times. We hit the long target once, twice. We'll call it 3 times. Because some of these were just part of the sideways consolidation. But the Russell is also trying to climb. Okay. So you've got a high, a lower high, and a lower high. Doesn't mean price can't get through there. Just means you should be very cautious. 23.22 to 22.32 to 22.34. That's a nice window of opportunity. Okay, if price gets there, don't jump the gun. Don't pull the trigger now, because we're only at 22.30. Wait for price to break 22.32 or touch 22.32, and then 2 points, go for the day. In Q, here's where we open. We dropped substantially on this second candle. What do? We opened 23.011 and dropped all the way to 973. That's about $800 per contract traded. $20 a point. Now, the step line crossed red and falling. Black step line crossed red and falling. When that happens, price will typically retrace back to the BBC. And we had resistance times 2. Remember, when price moves up to a zone, we expect resistance until proven otherwise. And the pullback to the BBC holds more often than not. That's why I call it resistance times 2. And it sent price all the way down to the short target, which was based off this low right here. Actually, I was being conservative. It did spike right to that low. Support sends us looking for resistance. This is not an area I would have anticipated resistance, but again, no one knows what's going to happen next in the market, but you can know with a high degree of probability what the next high probability move is. But 20% of the time or less, price is going to do something other than what you expect once you learn to read the charts and the indicators, whatever indicators you're using, whatever strategy you're using. So from resistance, we go to support. Same support we had back on Monday. Now these are the zones that were published Monday morning at 6:15 a.m. Eastern. And here we are on Wednesday, and they're still doing their job. We're creeping above the zone. Watch for resistance at the high of the session, which is 23.0895. Okay, that covers the indices. We'll pick up with crude when I come back. Michael's going to give us a recap of what happened this morning in the live training room, then do a little live trading on the TradingView platform. And again, I'll come back, finish the recap of the CTAs, and wrap things up with our good word for the day.
All right. So let me just, all right, I can see everything I need to see.
And I got you centered. Looks good.
Perfect.
You're off to the races.
Here we go. All right. Good afternoon, everyone. Today is Wednesday, the 16th day of July, 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingIQ.com, click on the purple button right here. There is no credit card required for the trial. Just click on that purple button. When you do that, you'll be brought to this registration page, right? Where all we ask for is your name, your email, your phone number, down here at the bottom. This is the only required stuff, really. Actually, there's a little star after that. I guess that means you have to select all this, but they're drop downs, so it's not really a big deal. We do really want to get your TradingView login ID down here. If you don't have a TradingView login ID, click on this to get one. It says right here, if you don't have it yet, go to there to get one. Once you give us that, then we can get the indicators indicating on your charts. Now, I know there are some people who do not have TradingView yet, and so you may be reluctant to switch. I get that, but it'll be worth the switch. This is, we've been through a lot of charting platforms over the years, and this is by far once you understand what you're doing with it, it's by far the most intuitive platform and has the most features. And it's easier for us to create things with. So anything new that we create will be created here in TradingView. So yeah, again, just go here on the registration page, click on this link right here to get it if you don't have it already. All right. All right. Speaking of that, Dwayne, we have some things out there that we could use next time we have a sale. All right, so let's go here to the recaps spreadsheet. Now, this spreadsheet, for those of you who don't know, this spreadsheet goes back to January 2nd of 2013. So it's got all of my daily results going back for a very long time. Today, we ended up with an okay day. It wasn't a great day, but it was, up until like 11 o'clock, we were negative. We were going to have a blue day at 11 o'clock. It wasn't until something happened. I don't even know what happened. I don't know if Dwayne told you guys I wasn't listening earlier. He told you guys what did happen. I don't know what did happen, but something created a lot of volatility in the market right around 11 o'clock. Anyway, on the NQ today, we're up 118 ticks. On the Russell, we're at 41. On the gold, we're -7. On the ES, we're at +1. Okay, now the NQ, we weren't at the high of the day on the NQ. We stopped out on our last trade, it looks like, on the NQ. On the Russell, we weren't at the high of the day there. Looks like we stopped out on our last trade on that. The gold, we had a positive trade at the end, and the ES, we had a positive trade at the end, but we didn't end up at the high of the day on anything today. For the Russell, our high of the day was 56 ticks. We ended with 41. For the NQ, our high of the day was 143, and we ended at 118. For gold, it looks like the high of the day was 12, and we ended at -7. And for the ES, it looks like the high of the day was 8, and we ended with 1. So we'll get into all the individual trades, but it was 737.50 is what we ended up with, and that's with one contract. 9,675 so far this month with one contract over 11 trading days, averaging $879 per contract for 2-hour trading day. What do we end up with? 833. Okay. So far in the year, we're at 165,140 over 120 trading days, averaging 1,376. And following the 24/20 blueprint, we are we're finally at 15 hours on the year. So I was saying earlier, we're 6.5 months into the year, so we have 5.5 months left. And if we keep going the way we're going for the rest of the year, we'll work less than 40 hours getting our goal for the day for the rest of the year, in total. Now, if you were to do everything just like I did and quit trading when you get the goal for the day, goal being $100 a contract, so far this year, and adding one contract a month, So far this year, you'd be on your 7th contract and give up $74,837 gross. Okay. Net number, 72,047 and a half if you use my commission. And that's where we ended it this morning. That's how we wrapped it up this morning. So let's get into the actual trades. We'll end with the NQ because that is where we had the majority of the trades. We'll just start with gold at the beginning. Now, there was a little while there where I didn't do anything with gold when it got really jumpy in here. Gold was just moving around way too fast. Look, it did it again. Right here, something happened at noon. Something happened here. It was like something happened here at 11:30 I didn't see. Something happened here. 11:30 that I didn't see. Something happened right here at 11:15. Oops, I didn't mean to do that. Let me put that guy back down. Being below. Something happened here at 11:15. Wow, there was a lot of volatility during the break. And yeah, there was just a ton of volatility. But let's just go back to what we did. All right, starting here on gold. Our very first trade on gold was here. We picked up 12 ticks on that. Then we stopped out on the very next one, put us at -3. Then we had a 8 that got us to 5. Then we stopped out again, put us at -10. We had a break even right there, and I believe that is where we ended it. That is where we ended it for the gold. Didn't have any more trades that we took in there on the gold. Now, that's not to say that there weren't any more trades, but there was so much bouncing around and volatility when stuff like this happens. You got to kind of give it a few minutes to figure out where the midpoint is. You know, after all these gaps and everything else, it's got to fill all that stuff up and figure out what it's going to do. So in this period right here, this is 11:16 right here to 11:18. All those bars are in 2 minutes. You wouldn't want to do anything there. I wouldn't want to do anything there. Hey, we did take on the trade here. On the gold, that got us from -10 to -7, so we got a +3 on that one. Then it happened again, the volatility here. Right, this was from 11:30 to 11:31, all those bars. 11:30 to 11:31, that was when European markets closed. Let's see if there was any kind of order in here at all. There was this right here, ended up being a trade. That would have been okay to take. Yeah, there was nothing through there. This right here would have been okay to take. That didn't come out of the overbought. This right here would have been okay to take. Yeah, and volatility again all through there. So between 11:55 and 11:56, all these bars are in 1 minute. So I wouldn't want to do anything all through there. Wait till it settles down, maybe about noon here. You're looking for it to come out of the oversold, like right there. That would have been okay to take, I think. It might have been too high. This, I think, would have been good right there. That would have been okay right there. Now, what I'm looking for, guys, just so you know, is I'm looking for when price pulls back and it actually touches the midpoint and comes out of the overbought or oversold, depending on what direction you are. Okay. The conservative trades is what I'm looking for. That was it. Right now, we're not in any place where you want to place a trade right now, but we're almost there. We need a couple of down closes here. All right. Now on the Russell, we are going all the way back here. Okay, on the Russell. Our first trade here on the Russell, we picked up 25 ticks. I believe that's where we got our goal. We picked up 25 ticks right there. Then the next trade was right here. Picked up 4 more to get us to 29. Then oddly 11 to get us to 40. Then 10 to get us to 50. Then a break even. Then 1 to get us to 51. Then 5 to get us to 56. Then we stopped out down to 41. And that was the last one that we did, it looks like. That doesn't seem right, but maybe I have another break even in there. Okay, so there was another break even. And that was the last one that we did. Right, there's a lot of movement here at the end, but I wasn't having any of it. Then at 11:30, there was more volatility. See right here, all this from here. Actually, there wasn't that much on the Russell. It was more on the gold than it was on the Russell. But nothing's pulling back up to test the ribbon when the ribbon's flat. The midpoint, when the midpoint's flat. This right here was the only spot where it was right there. None of the other ones actually did that. And then it switched directions and nothing actually pulled back to it until right over here. But even on the up close there, it didn't take you out of it. You could have taken this up close right here, I suppose, right there. Okay, for pretty close to a break even. And just looking for opportunities. There were not a lot of them, but it was all coming together today. Where it comes out of the overbought, it's not anywhere near the midpoint. That one. And that was it. And that was it on the Russell. All right, we ended up with a plus 41 on the Russell. And the ES, we're back and forth with that guy too. Get the volatility in there at noon. More volatility right here at 11:30. And more volatility right here and right there. And right here. This was our start to the day right here on the ES. We picked up 8 ticks on our first ES trade. Then we stopped out, got us to -2. Then we had a +1, got us to -1. Then we had a +4, got us to +3. Then we stopped out again, got us to -7. And then we got a +8 right there. +8, that got us to +1. And then we had a break even. And let me just see what just came through. Okay, just sent me a picture. Okay. I will respond to that in a few minutes, Joe. Okay. Well, actually, I can respond to it right now, I think, because we're talking about, it was on the ES, right? We're talking about the ES. So, oh, it was a gold micro. Okay, well then we'll talk about it. I'll respond to that in a few minutes. I thought it was on the ES for some reason. Okay. So this, we're coming out of the oversold. This would have been a trade right there, but it didn't come out of the oversold. This right here was a trade that wouldn't have worked out at all. Below the YBR, so you're looking for something like this right here. That was a good trade right there. We'll pull back to the midpoint. You didn't get many of them. Nope. I'll pull back to the midpoint going in the other direction. Nope. Now pull back to the midpoint going in this direction. There was one right here. That would have been break-even trade. Then it flipped. Give you all that volatility right there at noon. I don't know. There's a bunch of stuff that happened in there, but we ended up with just a +1 tick today on the ES. Now the NQ is where we had the majority of our trades, so I'm going to have to hit Alt and back on this guy. Okay, because it had a lot of bars today. Wow, it had a lot of bars today. There we go, 932. All right, so on the NQ, we started out with a mistake right here. I took this trade and I don't know, I think I should have had my stop at break even, but I ended up stopping out on that. I took it too late. I think it had already gone and done all this by the time I took it. I took it like over here. It had already gone all the way down here and come back up, and then I got into it and I ended up stopping out. So on the NQ, we started out with a -25. Then I got 5 there to get to -20. Then I got 4 to get to -16. Then I got 12 to get to -4. Then I got 45 to get to +41. And then went from 41 to, looks like 57, maybe 51. 57. It was 57. And then after 57, hold on, we stopped out, went down to 22. Then from 22, we went up to 38. Then we stopped out again and went down to 13. And then we stopped out again and went down to minus 12. Then we had a break even and we got up to plus 8. So I had a plus 4 there. And all this volatility that triggered. And this one right here, what was I in before that volatility trade? Was that the one? No, it wasn't that one. I think it might have been this one here. It's the high of this bar. No, that wasn't it either. But anyway, we went from minus 12 to minus 8, and from, I must have gotten 45 ticks on that because we went to plus 37. Then from 37, we went up to, what does that say? 82, that's what it says. So we got 45 there. Then from 82 to 98. Somewhere in here we had something, we went from 98 to 143, and then we stopped out here and went from 143 down to 118. And that's where we ended it, at 118 ticks on the NQ. Now, I'm not going to go through every trade that happened during the break because there's just way too many of them. Okay, I'm just going to go to the end. And we'll pick up where we are right now, which is nowhere right now. All right. There must have been a Russell trade a little while ago that was setting up, but I didn't get filled on it because I have an order waiting, and it is not filled. The gold right in here had a long trade right here off of this. I was kind of actually, that was below the midpoint, so I probably wouldn't have done that if I'd seen it. So we don't have any other trades right now, right at the moment. All right. Let's see. Go back here for a minute. If you have not taken a free trial with us, go to mytradingIQ.com, click on the purple button. There's no credit card required for this trial. Go there and click on that. It's going to be in the registration page. Just fill out the form. Make sure you give us your TradingView login ID down at the bottom. Okay. Okay. Get back in here. See if we can trade something. I am looking over here. See what we have going on in there. Nothing. And this one. Nothing. All right. So we're below the YBR. We're pulling back. I'm sorry, we're above the YBR, but we're pulling back here. We need to get into the oversold and then give it up close. I'd really like to see get away from everything right here on the gold. All right, the Russell, we're not in the oversold, so we're not going to have any kind of a trade there. The ES, we're coming out of the oversold, but this last one didn't make it into the overbought, so you don't have a trade there. The NQ, and up close here on the NQ would be a trade. Okay. Now find the bottom of the bar, and if you just do that, the bottom of the bar is at 52.25, so 5 points above the bottom. 57.25 is what you'd be buying right now. 57.25 is what we'd be buying on the NQ right now. All right, the last time it came out of the oversold, it did make it up and it pulled back and hit the midpoint. So 57.25 is what you're going to buy on the up close. It's not there yet, but that's what we're looking for. It's not looking real strong here, but it just triggered me in on the up close at 57.25. It actually slipped me 2 ticks, got me into 56. I'm sorry, 56. Hey, it slipped me the other way. Anyway, once we get 10 ticks in profit, we'll bump this stop to break even. But it did slip me. My order was at 57.25. We need 10 ticks in profit. That is going to be 59.25. All right, once it gets to 59.25, we'll bump the stop to break even. Now, this swing high right here is at 60.5, so it should get up to there. One more tick, there it is. Stop's going to break even on this. Now, it should get up to 68 right here, but for right now, I'm just going to lock in 1 point, and it should get up to 68 all the way up here. All right. That's where it should get. Now my target is up here at plus 45 ticks, right at 68. All right, so my target is right up there where it should get to. So I'm going to lock in 8 ticks, 12 ticks. And we have 12 ticks locked in right here. And this is at 120. Right, and there we go. We're out with 12. Okay. All right, so let me just explain why I did that. Right. The midpoint was established in flat right there. Price came down to it. It closed just a little below it right here. But when it gave this up close right here, it pulled out of the oversold and gave that up close. That's why I took that trade. So we got 12 ticks out of that right there. And if it pulls back again, you see how the midpoint's adjusted right here? We're below the midpoint now, but it's flattened out again. And up close on this is going to pull it out of the oversold. And remember, 68 is where we expect this thing to get up to. If we get a down close on this and it goes sideways, then we're going to have to reestablish what will happen next. You see the next bar, if it closes up, will not hit the midpoint. So the next bar, if it closes up, is going to pull you out of the oversold and not be a trade right here. Okay, it's going to pull you out of the oversold and not be a trade. So you're just going to have to hold off on this. The reason it's not going to be a trade is because it's going to be below the midpoint like that. You see, you don't want to take that trade when it's below the midpoint like that. Let it go all the way up, put something else in, then come back down and give you another shot at it. You see how it's adjusted the midpoint now? So let it move up, continue the trend. It's in the overbought now. I mean, hopefully this bar is going to close up and it's going to move up some more. If it doesn't, then it's just going to make it a little bit of a mess in here. But so far we have the one trade right here for 12 ticks. So if I put text on that, let's see, right there, 12. Nothing else is giving us a trade yet. The Russell's pretty close. We need it down close here. We need this line down here in this line to go sideways down here. Right? The way that this has come together right now is not going to turn into a trade. It's not. We need a down close and then an up close, and the up close isn't going to be close enough. The Russell's pretty close here though. Okay, now the Russell is at the midpoint, and if this bar closes up on the Russell, you'll have a trade. Okay, the low of this bar right now, if I hover here and press the left mouse, the low is at 30.9, so we're buying 31.9 right now. 30.8, buying 31.8. It's a low now. 30.8, so you're buying 10 ticks above that. 31.8, like this. Okay, 31.8 by stop limit. Okay, that's what we're looking for. That'll bring this out of the oversold right there. Filled me at 31.8. I didn't get any slippage on that. It ran up to 32.3, but I didn't see it. It happened so fast. It ran up enough to get the stop to break even, but I didn't see it because it happened so fast. But it's got a 15 tick stop on it and a 30 tick target, I think, right? 25 tick target. So it's got a 15 tick stop with a 25 tick target. I want to see it get up to 32.3 again right here. It jumped up there, but I didn't see it actually get up there. I could throw my stop at break even right now because I know it's actually meant the requirement. But I want to see it push up right here. There it goes. Now I'll throw the stop at break even. I did see that one. When locking just one tick on this, that pays for the trade. And it should get up here to 34. All right, my target is up there at 34.3. I would be happy with 34. I'll move that down to 33.9. Right, that'd be 21 ticks right there. Okay. I'm looking at the prior swing high right here. One tick below the prior swing high. That would make me happy. I'm gonna lock in 5 right now on this. Okay, and we're out with 5. Right. It's pretty simple stuff, right? It's not that hard to do. You're not going to do anything with this. You're not going to do anything with this right now. All right. And over here on the gold, an up close on gold you could take right here. It's really choppy. But an up close on the gold you could take if you wanted to. We're going to run out of time. We only have 4.5 minutes left. But yeah, the up close on gold right there you could take. Okay. And there it is. Okay, it's really choppy in here. The gold is. So I mean, I took it. Oh, I took it, and I'm going to throw my stop. I don't think it's made it up to 0.3 yet. It's going to go one more tick up. There it is. Stop's going to break even. I'm going to lock in one tick on the gold. Okay, came out of the oversold at an established midpoint right there. That's all you're looking for. Stop to +3 on this. I didn't mean to go to +3. I meant to go to +2. Okay, it's $100 a tick for me right now on the gold. So I'm going to go to +3 now. And it should make it up to 61.1, right? My target's up here at 61.3. But now I'm going to lock in 10 ticks. That's $1,000. And there it is, 10 ticks on the gold. Right? And so we've gotten the gold for the day almost ×2.
Nice job.
Thank you. It's now 127. So, I mean, this stuff, it can't get much easier, guys. Now, over here on the NQ right now, we'd be looking for an up close. We're off the midpoint, established midpoint. We need an up close off the midpoint. It's going to pull it out of the oversold. Easy as that, right? And this is continuing up, so we want to see that get up here, 361.1. 2.5 minutes. And we just about got up there, didn't we? The high on this is 61.0, so we're going to hit that 61.1. We should go through it here, I would think.
What would your entry price on the NQB, and explain to folks how you know that, please.
Okay. Look at, all right. Yep. It's all changed now because
everything changed.
But all right, let's do it on this bar right here.
Oh, you may be able to get a short out of it now.
The highs. Yeah, the high. I was just gonna say the high is at 52. So nope, it didn't make it into the
trigger. Didn't make it.
The highs, right? Didn't make it into the overbought. If it made it into the overbought, we'd be looking at a short trade right there. Now the up close of this bar should have brought it into the overbought, but it didn't. If we get an up close on this bar, it might bring it into the overbought, and then we need to get it out of the overbought. Right. So we're a couple bars away from a trade there. We're back over here on the gold. The down close here on the gold, that gave a gap too. A down close here on the gold to put you in the oversold, and then you need an up close to get out of the oversold. Nothing on the Russell and nothing on the ES. We didn't get into the overbought here on the NQ. Otherwise, we'd have a trade there. That was close. I was going to go through everything over there, but
close, but no cigar, as they say.
Yeah, changed really fast. So here we need a down close on the gold to get this into the oversold, and then an up close on the very next bar. All right, it will work out. If that happens and it doesn't go down anymore, it will work out to be right at the midpoint, or the midpoint. Years of conditioning. Those words in my head. All right, so we almost have a trade here, but we're about to run out of time. We have 30 seconds left. So in this session, we had a +12 on the NQ, a +5 on the Russell, and +10 on gold so far. The NQ could come around again here. It's gone into the oversold. It could pull back up and give us a shot here. The ES needs a down close followed by an up close. The gold needs a down close followed by an up close. The Russell needs 2 down closes followed by probably 2 up closes. All right, the gold got the down close. Now there's a chance. If the gold doesn't go down anymore, there's a chance for another trade here on the gold. The low is at 58.5, and you see the midpoint is at 59.5. So it doesn't go down at all, which it just did. Then if it didn't go down at all, then you had a chance for a trade, but you don't anymore. The reason I know that, let me explain that. It's kind of the same thing that we were going to explain a minute ago. These are range bars, so I know that the up close of this bar was going to be below the midpoint, and I know I don't want to take a trade going long below the midpoint. Right, but because it went down more, I knew the bottom of this bar plus 9 points was going to put you below the midpoint. I knew that ahead of time, so I knew that wasn't going to be a trade. Okay, same stuff over and over and over and over and over again every day. All right, there we go. So with that, we ended up with +12 on the NQ, +5 on the Russell, +10 on the gold. And we're going to wrap it up here. I'll tell you how to take the free trial again. Go to mytradingq.com, click on the purple button, no credit card required. It's going to bring you to the registration page. fill it out down here at the bottom. Gives your trade view login ID. Okay. That is it, guys. So in that session we just had, I had 12 ticks there. That is $60. 5 ticks there. That is 25. So that's $85. And 10 there is 100. So I had $185 with one contract, or $1,850 with my 10 contracts. It's there again and again and again every day. Take the free trial. Make your goal for the day. All right. And with that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Mm-hmm. I'll be ready.
All right.
All right. Recap of the morning session.
Today it took 6 minutes and one trade to get to $1,250.
Great job.
Thank you very much.
All right, guys, we'll pick up where we left off. We covered all the indices, and we're just getting to the crude. If you missed the beginning of the broadcast, about an hour after I sign off, you can go to youtube.com/CFRN and watch the entire broadcast in its entirety. So this was the open last night on gold. We ran into blue and climbing, which when it gets directly above price can become resistance. Resistance always sends the market looking for support, which it found at the BBC. The pullback holds more often than not. We spiked red and falling, and we spiked it, and we spiked it, and we spiked it. Now this high right here is this high right there. See that? It's called market structure. You should be expecting resistance. Now on this candle, you weren't expecting resistance because you got to close above blue and climbing. So maybe that's when you got stopped out on. Stops happen. It's a part of trading. This one you should have been expecting resistance until proven otherwise. And it did not prove otherwise. In fact, that resistance sent us below the all the way down to the short target, where we consolidated and then dropped to the weekly zone below. Now that's not the lowest weekly trading zone for crude. There's still one more down below. Red and falling turned to blue and climbing. And this high right here was unable to take out this high right here. Question is, will this green candle be able to do the trick? If it does, right here you have a bearish cross. That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. So if we take out this high, then you should be looking for resistance at 66.75. First time up. Maybe the second time up, if it tries again, then look for resistance here. And then again here where you have a double top on the session. Gold. Now, here's where gold opened last night. This green candle right here. But we opened right at blue and climbing, which we know is potential support when it's directly below price. So that sent us up to the BBC. The pullback held. The blue and climbing held a support. Got us above the BBC. We consolidated at the zone, as we do 70% of the time. Remember, 70% of the time consolidation, 20% of the time rejection, 10% of the time the slice. But on this slice, price did not pull back to the zone it sliced through. However, it did continue in the direction of the slice for a little bit. So we hit the long target. We ran all the way up to here. Now, yesterday we got stopped in our tracks with a double top right at the previous bearish cross. Second time up, we overcame it. Right to where blue became red. See that? Now we're going back 2 days. That's market structure. Price then drops back to the BBC and the zone. Support times 2. Bounces us. Well, first, this candle continued up almost to the zone. Basically this high right here. You guys see that? Okay. Resistance sent us back to support at the BBC, which sent us back to resistance at the zone. Now we're consolidating sideways with an upward bias because we're above the BBC and we have blue and climbing. But look at that step line, the black step line. It's trying to cross blue and climbing. If it does, then you should expect price to retrace back to the BBC. And this low here, if you go look left on your chart, you'll see the reason why. In fact, we took out this low by just a little bit. We're always suspicious of just a little bit. That's what that is, just a little bit. Silver. Here's the open. Right at the zone. Blue and climbing. Support. Took us to resistance at the BBC. The pullback held. Would send us back to the zone where we expect support until proven otherwise. Consolidation at the BBC. And then we climb and we find resistance at a spot I would not typically expect it. 20% of the time or less, the market is not going to do the next high probability thing. We roll over, come right down to the short target, which is based off this low from yesterday. Spiked it a little bit, and we got back above the BBC. We took out this high, but again, we got resistance at an area where I would not have called for resistance. But you got to trade what's in front of you. Price goes back to the zone where it finds support. Now we're above the BBC. Red and falling is turning to blue and climbing. So a trade from 38.20 to 38.24, that should bear good fruit. That would be $200 per contract traded. 2 pennies is $100. You see the high of this candle is 38.17. So that's why you're going to wait and enter at about 30.20 and take 4 pennies up to 38.24. $200 per contract traded. But you got to be patient. Okay, this price may not break this. Now, this high is 38.17.5. But I'm not jumping in at 38.17.5 or even 38.18. I want to see 38.20. Then I'm convinced we'll at least make it 38.24. Potentially we'll make it to 38.34. That's another dime or $500 per contract traded. And then potential resistance at 38.38. And then the long target, which is based off this high from yesterday. And that covers all the markets. Now in the ES, I said we were going to go back and look at something. I'm trying to remember what it was. Well, as you can see, we hit the zone, spiked it, and we're sitting right below it. Now the step line has crossed red and falling, but in a different way. We could see a retracement back to the BBC. Question is, can we overcome this zone? Now the zone's 95/96. So 98 You'd have to go in at 97. That's just 1 point above the zone. Not really comfortable with that. I'd much rather wait for this. 63.05 to 63.10. It's 5 points. You'll need 2 points on the ES to get your goal for the day. Just don't have enough room to work with right here. And from here to here, definitely not enough room. But you got a beautiful window of opportunity over here. And you might be prepared to take profit at 63.08. 63.04, 63.08, that would be 4 points. 2 points goal for the day. One last look at the big picture. We got red and falling overhead. We're at resistance at the black step line. We're sitting on top of support at the 50% fib retracement. And we came oh so close to touching the daily BBC. Again, the BBC is rising to meet price as opposed to price dropping to the BBC. And that's a very different dynamic. Tomorrow we may be talking about that dynamic. Depends on how we close today. And I'm not sure what news we have tomorrow morning, but I can find out. Tomorrow at 8:30. Oh, big one. Core retail sales at 8:30. That's high impact. And also at 8:30, high impact initial jobless claims. Analysts are expecting 233,000. Last time we got 227,000. And then also at 8:30, we have the Philly Fed. That is high impact. And also at 8:30 tomorrow, we have retail sales, high impact. So we've got 1, 2, 3, 4 high impact economic reports tomorrow morning at 8:30 a.m. Eastern. How should you trade that? You shouldn't. Be flat. Because this is not your father's market. Back in the day, good news always sent the market higher. Bad news always sent the market lower. No longer the case. Because there's so many factors and mitigating circumstances. Good news might mean the Fed is less likely to lower rates. Well, what's a person to do? What's a trader to do? What I just said, nothing. Wait to see how the market reacts, and then trade the reaction to the reaction. That's the safe, conservative way to trade it. Okie doke. Okie doke. If you want to become a member, and why wouldn't you? Send an email to support@cfrn.net and just say, I want to become a member. Let us know if you're a veteran, and we will provide you with a discount to thank you for your service. Now, when you send that email, you're going to get an email in return from Valerie explaining everything entailed with becoming a passport holder. And there'll be a link for you to click to seal the deal. 9 out of 10 new traders fail because they don't have a teacher. We provide a teacher 2 hours every trading day. It's not just you watching somebody else trade. That's not going to teach you how to trade. You could spend a year watching videos of Mark Spitz swimming. It's not going to teach you how to swim. In the live training room each day for 2 hours, Michael is actively putting on, taking off trades, explaining every move he makes, every trade he takes, and the reason why. and you see the results right before your eyes. Now, you are listening, learning, asking every question that pops into your head, and trading along in your demo account. When you become a passport holder, you're going to receive the 2420 blueprint, among other things. The 2420 blueprint is going to instruct you to learn the strategy first, so you don't blow up another account. Now, how do you know you've learned the strategy? Because you put together 10 consecutive days in a row in your demo account where you reach your goal in 10 trades or less. Then the blueprint will give you the green light to go live with one contract, real money. The blueprint will notify you when it's time to add contract number 2, number 3, number 4, all the way up to number 20. It's called the 2420 blueprint because it's designed to help you go from 1 to 20 contracts over a period of 24 months. Now, you may not want to trade 20 contracts because you get some pretty significant slippage. As you can see, Michael is capped at 10 because he can live with that much slippage. So once you hit 10, then it's up to you if you want to continue to add contracts. But you only add when the blueprint says it's time to add. You only add one at a time, and you only add with profit you earned in the market. That's how you do not blow up another account. But if you don't follow the rules, you jump the gun. Man, I've been at this for years. I'm just going to go live right off the bat. Well, we have no control over that. We'll always advise you the right thing to do, but what you ultimately choose to do is up to you. My best advice is follow the rules. Along with 2 hours of live training every trading day, you have access to private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. It's just how markets work. As a passport holder, you get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published every evening. Thursday afternoon, you'll get an invitation to attend the members-only workshop Thursday night at 8 p.m. Eastern. And Monday mornings, you will get the weekly trading zones. And once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. And when you're on the trial, you have access to the public channels in Telegram, so you can talk to our traders, get the alerts, get the zones, etc. But when you become a passport holder, you get the golden keys that open all the private channels in Telegram. You have access to everything. Everything a trader needs, all under one roof. One low price. It's a good deal. I checked. All right, let's wrap it up with our good word for the day. Become willing to change. Many of us get stuck in our ways. We don't want to move out of our comfort zone. So this is part 1 of becoming willing to change. 1 Timothy 4:15. Meditate on these things. Give yourself entirely to them, that your progress may be evident to all. Recognize that without change, there can be no progress. Now, we're not advocating change for its own sake. That can be a characteristic of restlessness and a symptom of inner conflict. Change can represent great opportunities as well as potential losses. Although all progress produces change, not all change produces progress. But as American leadership expert Max Dupree observed, we cannot become what we need to be by remaining what we are. If you want to grow, you must be willing to change. American General Douglas MacArthur, hero of the Pacific War, said, "Life is a lively process of becoming. If you haven't added to your interest within the past year, if you are thinking the same old thoughts, relating the same personal experiences, having the same predictable reactions, rigor mortis of the personality has set in." Did you get that last sentence? Rigor mortis is the physical rigidity that sets in after death. And it can happen to you relationally, career-wise, and spiritually. In 1 Timothy 4, Paul is mentoring his spiritual son, Timothy, to take over leadership in the church when Paul is no longer around. And he was letting Timothy know he couldn't inherit the mantle of leadership simply because Paul loved him. Rather, he would have to work for it. And that meant working on himself. Meditate on these things. Give yourself entirely to them, that your progress may be evident to all. Opportunities in life come to all of us, but they're only recognized and grasped by those who are prepared. And that means being willing to grow, adapt, and change. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.